Well, hello, folks. I'm L.A. Little, and this is your weekly NeoTA wrap. When we take a look at these markets, we do it from a neoclassical perspective. Each time we ask ourselves just the one question, and that is, what happened last week, and what might it tell us about the coming ones? Do this show once a week, every Sunday evening, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. If you look up in the right-hand side, you can click on the subscription button. Each time content's pushed, you'll get notification. Easy, simple way to stay up with what we're doing. We've created some channels as well. If you want to, pull in on those playlists, subscribe to those individually if you care. That way you can get specifically what you're interested in, or just subscribe to everything. As far as what happened last week, it was an up week. It started off that way. It ended that way. Much to our surprise on Friday, it was. We kind of thought, and when we looked at it Thursday night, it looked like we were going to get a sideways to a down day on Friday. It probably would have shaped up that way, but once again, the old central bankers step in. They tell us, in this particular case, the ECB, that inflation is an evil sin, that we are going to find a way to lift inflation, and we will, quote unquote, do whatever it takes to make that happen. So what do the markets do? They charge ahead on Friday, finish out a strong week, and they basically ended up doing takeaway bars. If we look at the individual numbers, pretty good push up on Friday, not bad at all. He actually had the DAX close higher again, and the dollar tacked on another 0.75% almost. Let's take a look at the charts themselves. We'll start here, not with Apple. We'll actually start with another stock, although I was going to show you Apple, so I guess since it's up here, I'll go ahead and finish that story. Friday's push, over and under, less volume. Apple looks to me like it's getting ready to try to come back in, and Apple being such a large weighting, if in fact that does happen, we'll see some sort of a pause probably in the NDX. But let's go to the actual indexes. To kind of review from a longer term perspective what's going on, what has been going on, let's pull up the weekly chart here and just kind of review back again what had happened. If you remember, you had a sideways range for a good 6 months, pretty much all year long up until August. And then that's when we saw the big plunge. It goes sideways for a while, and then the big rise. And so once more we see kind of that V-shaped, can't kill us type rally, right back up at you, right? Going to try to break out of the top one more time. Last week, or the week before I should say, you got a nice big spike down, as we saw and as we talked about previously in other shows. That was a test back into the on the NASDAQ itself, a test back into on a daily basis, the bullish retest regenerate zone. That's this prior swing point high that was broken. It was the first time back in more than 6 bars. So you go more than 6 bars across after that breakout bar here, which was the big spike up on Amazon, Google, and Microsoft earnings. You finally come back into it here, you test into it, and then you shoot right back up, and you're going to try to regenerate higher. Now, a regenerate higher in this case means you have to break out above whatever the swing point high that was made on the spike up. You have to get above that, right, and then start pushing this thing up higher and higher and higher. That's the regenerate that's attempting to take place, and that's on the broad composite, not the more narrow NDX. And it comes off of a bullish retest regenerate, high probability that it's going to be bought, and it was bought. If you look at it on the weekly, the swing point, the breakdown bar was here. The top of it was 50.92. You got over it for 1 bar, didn't stay over it, right? Got the pull back to about a normal retrace that one would expect. Now you do almost a complete takeaway bar. You're right back up there hammering at that again. That's 50.92.69. You close it this week at 51.04. So you're over it, trying to push higher, trying to go after the swing point high at 52.31. So at 51.04, 52.31, you got about 127 points to go. So that's a pretty good spike to get up there. But that is the target now, not only this week, but in the coming weeks if we don't get it this week. That's what the NASDAQ is doing. And going back to the S&P and putting it on a weekly chart, you do almost complete takeaway. The test here on the S&P is the 2103.47. Need to close over it. Hasn't done it yet. Got close but didn't close over it. So that's going to be the test this week. That's going to be the easier test since we're so close to it already at 2089. So S&P, NASDAQ, those are the guys that are testing this week. As far as the weakest group, it's been the Russell. It underperformed again last week. It comes up into the top of what was the latest breakdown bar, was 1177.35. Test into it and over it. Also test over this bar at 1178.78. Also testing into the bottom of the swing point high. So the Russell has a lot of resistance here at this particular point on the daily chart. Pull it over to the weekly. That was a nice spike up the last time, got over that swing point high, then it does a complete takeaway bar and more on the very next bar. Now it's trying to push back up, got about halfway up. For the Russell to really get something going, it would have to get over the top of this August 17th breakdown bar. That comes in at about 12.25, and with this trading at 11.75, you got a 50-point shot to get back up there, which is going to be a pretty good push when and if it ever does come to bear. So Russell being the weakest, as we get closer to numbers where it makes sense to look, the Russell's the one to look at. The Russell being the weakest, of course, on the way down is the one to look at, as we did last week or the prior week on that big spill. So mixed indexes have been mixed indexes. They continue to be mixed indexes. The difference overseas is the DAX. The DAX actually came back in. This swing point high it broke out over 11.0545, 05545. Actually got back into it on Friday, but with Draghi's speech and the euro pushing lower, that kept the DAX higher. And the DAX pushed on up in here to test and get over this breakdown bar at 11,113, closes 11,119. What you want to see if you're a bull is you want to see it hold this now for another bar on the weekly basis. And if it does, then that would say, hey, it's going to go after swing point highs on the way up. And that's the DAX. That's the strength in Europe at this particular point in time. So Europe's still showing strength, mainly off the central banks. Over in Asia, you've got the Nikkei still showing strength, and that's off the weakness in the yen, where the yen had broken down, popped up, tried to test under, couldn't, is hanging down here in no man's land, basically. And the euro also doing the same thing, breaking down farther, and I wouldn't be surprised to see it break down even farther as we get closer and closer to the Fed, which says it's going to raise rates come December. So you got dollar strength pushing those major currencies the other way. Here's the dollar spiking up. It's already over swing point high, so it's broke out on multiple time frames. That says it should extend 2 to 3 bars. This is bar 2 last week. Third bar would be this week if in fact it can push higher. I suspect it's going to try to get into this 26, 22 number basis, the UUP on the weekly. When and if it gets over the highs, you're going to see all kinds of screaming again, just like we've seen before, in that it's going to pressure earnings on these big multinationals. So the dollar, so far, it's a boon to everyone overseas, making their currencies cheaper and therefore their markets working higher. Still a boon here in the U.S. because it hasn't broken out of this big range yet. If you look at it on a long-term basis, right, here's the monthly chart, a breakout over this swing point high, and which would in fact be a continuation move right after a consolidation. It would be seen as a continuation if it were to do that. And if that happens, right, what do you have? You have this huge ABCD structure on the way up, and that would raise some eyebrows if that starts to play out, because that projects way, way higher. So, so far, hasn't hurt us, us being the equities in the U.S., but if it continues along this path and breaks out, I suspect you're going to see some repercussions in the U.S. equity markets as a result of that. So that's kind of a good feel for what's going on. Of course, strong dollar, weak commodities, weak everything basically outside of the equities. You got Thanksgiving weekend this week. Thursday's off in the equity markets. You've got a slow day Wednesday in front of it, a slow day on the half day Friday after it. So really, Monday and Tuesday are the only 2 days you're going to see movement. I wouldn't be surprised to see some sort of pullback if it's going to occur on Monday or Tuesday, because you've got a lot of economic numbers coming out those 2 days, and seasonally, it's very tough to go down the day before and the day after Thanksgiving. So that's a wrap. That gives you a good feel for what's coming up this week to start with. I think you're in a seasonally positive period for the equities. I think the fly in the ointment, if there's going to be one, is going to be a strengthening dollar as we get closer and closer to the Fed meeting, and as we continue to see central bank intervention, as we saw in China and talk of it in Europe, making that dollar even stronger as we head towards that meeting. All right, folks, tell a friend, tell two. I'm LA. This is and was your weekly NeoTA wrap. Have yourself a great night. Hope you had a good weekend, and I'll see you tomorrow night. Good night.